At the Open, though, this morning, the talk is about this bombshell report of an arrest of a Chinese citizen, the CFO of Huawei, as you just heard, that is rattling global markets. She was arrested in Canada. Chinese telecom giant Huawei's chief financial officer, Sabrina Meng, also the daughter of the company's founder. She was arrested in Canada at the request of American authorities. Joining us right now is Citi Private Bank Global Head of Investments, David Bailin. And David, it is good to see you this morning. Thanks very much for joining us.
Pleasure, Maria.
We were all looking forward to the opening of trading after the markets were closed yesterday. When you see a market down almost 500 points, what do you do?
Well, you don't do anything in a given day, but when we think about the impact that this can have next year, it can be very significant. This escalation of a trade war, if it were to continue for 12 months or 24 months, could have a very significant impact on U.S. earnings, and one that's underappreciated by the market. At a time when you have extremely large deficits in the U.S., rising interest rates, and this trade war going on, we think that it could have a very significant impact on earnings that I think is underappreciated.
Do you see this arrest as an indication that perhaps things are getting worse, that the trade impasse is not getting any better?
Well, the truth is that this is consistent with what the administration's policy is, which basically is to have a substantive negotiation. But if you think about what the president is actually saying when he leaves these meetings, he's extremely optimistic. He gives people the impression that things are imminently going to happen with China that are going to be good, and that's clearly not the case. This is a very complicated issue. I was at the Milken Institute in London listening to some of the president's representatives on trade, and they referred back to the negotiations with Japan that took place a long time ago over dumping of semiconductors. And that took 7 or 8 months of negotiation. But Reagan, of course, wasn't tweeting at that time. And so, that's somewhat of the gyration here. And so I think it's a combination of these things, to be honest.
Robert mentioned that we did get some good news yesterday. There had been, after the weekend meeting, a kind of a he said, she said, where you weren't sure whether what Trump said or what Xi said was the good guide. But the Chinese yesterday saying, yeah, we did agree to the 90-day negotiating time frame, and signals that from their Supreme Court and elsewhere that we are going to respect intellectual property. How do those figure into your view, aside from this Huawei arrest?
Yeah, I mean, the day right after, the president's tweets, when you actually heard virtual silence from China about what they didn't really confirm anything that the president actually said. Their statement, the translated statement that they said did say what you're saying, which is we did agree to the 90 days. We do very much want to have a resolution. They've been pretty silent after this, and so to me, I think that's part of it, is setting expectations too high. The president coming out and being almost too optimistic about the imminence with which things can be resolved.
I will say that the Commerce Ministry spokesman in China is saying on Thursday that Canada and the U.S. have not explained the Huawei executive's arrest, but in other commentary, the Commerce Ministry said the goal in trade talks with the U.S. is to remove all tariffs. That's good news to outweigh the bad.
That's good news, absolutely. But, the average person out there doesn't look at the cost of the theft to this country of intellectual property. I mean, we yesterday had the president of Microsoft on to talk a bit about the impact. This is adding to this U.S.-China trade tension just days after that trade truce was reached. Brad Smith, president of Microsoft, talked about what the impact is to the theft of IP and how important this is to U.S. companies. Watch this.
There are still issues we need to address, but there's been an enormous amount of change. We are still seeking as a company access to a number of parts of the market in China. We'd like to see a relaxation of some of the licensing restrictions and the like, but there are now patent applications filed by Chinese companies in China every day, as well as by American companies every day. China has become an enormous source of intellectual property creation. That is a huge part of the sea change over the last quarter century. So I think the two countries and the two governments are in fact much closer together than they were, say, when we started in China, when I joined Microsoft 25 years ago.
David, he was trying to make the point that at this point, China has its own intellectual property to protect. So maybe they get it. At the same time, the former CEO of Microsoft, Steve Ballmer, told us on this program that it is about $10 billion a year in profit that it costs Microsoft, that theft that China is doing. And Brad Smith, the current president of Microsoft, would not agree or acknowledge that it's 10 billion, but he said, look, it's a sizable number. This is a real issue. Here's that sound.
I think there's a lot of opportunity to move the needle on this and many other issues. I think we want to have a regime that respects intellectual property. We need open access to these markets. As you mentioned, this is a country with 1.3 billion people. We need stable regulations in both countries. We would welcome the opportunity to do more in China, but do it in a way that gives people in both countries confidence that technology is being protected and respected.
So far, David, we don't have any indications from the Chinese that they're going to stop the IP theft, stop the transfer of technology, and open up its markets.
Right, and I think those are extraordinarily substantive issues, and we have to break apart, I think, the economic impact of resolving those with the way the resolution is taking place. And that's really what the market is really signaling, in my mind, Maria, which is that the nature of these negotiations are very substantive, very deep, and extremely important to the U.S. economy, and in fact to the global economy, because if in fact the market is opened, as he was saying, that would be very good for U.S. companies, but good for companies in general. The conduct of the trade negotiations is what the market is responding to, right. And I think that it would be worth considering it being done in a different way from an investor standpoint.
Go ahead, Ron.
Maria, I agree with exactly what you were saying. This is a whole umbrella of U.S.-China. Huawei, right now, it's with respect to ignoring our Iran sanctions.
Mm-hmm. Right.
With respect to intellectual property, that's economic espionage.
Right.
When they steal our patents and intellectual property, or they discriminate against open trade and and literally make their barriers impossible for us to go in without us giving their intellectual property, it's not going both ways. I think your interview with Brad was incredible. That being said, he was acting like a public company CEO.
Yeah.
He wants to do business in China. He wasn't going to go there.
Yeah, but the Chinese are not opening up the markets. I mean, they're suggesting maybe in 5 years a foreigner will be able to own out and out a company, but not right now. Okay, from a market standpoint, you've got to make decisions every day. With this impasse between China and U.S., do you want to stand pat, raise cash? What do you want to do?
Yeah, so we just came out with our outlook, for next year, and I think that investors have to do really three things. One, they have to sit pat and have their core portfolios invested. Market timing is an absolutely terrible idea. Two, they have to have money set aside to be opportunistic. At some point, these markets, especially the Asian markets, are going to become a real buy for investors in the United States, ironically, when it's all said and done. And number three, we have to be very cognizant of the fact that managing cash, managing your fixed income portfolio is incredibly important. U.S. investors now have the opportunity to really put their cash to work and make it work much harder. And there's opportunities for that. So that's what we're telling people to do. But market timing, selling now and all of this and panicking, I think, has proven to be a terrible decision on the part of investors.
So going into 2019, do I want to add money to stocks or not?
We're going to want to keep our current allocation, which is over 50%, intact for the average investor. We expect earnings to be up 8% next year, assuming no major China impact. Yeah. And if earnings are up 8%, we think the markets globally could be up 7%. So we're positive on the markets, with the exception that I think we are dealing with an extraordinary situation here in terms of what the trade impact could be.